Hey guys, welcome to another edition of the Market Review. My name is Vasily, I'm your trading coach and professional forex trader. Reading your comments, I noticed that many of you want me to just show how to identify the key levels, how to identify the structure and how to execute the structure analysis. And funny thing, because I recorded so many videos, but I never talked just about structure. So I decided to discuss with you euro-dollar pair, and on that we're gonna execute the structure analysis, top-down analysis and structure analysis, and by that we will try to identify where the market is going, why, and from where it is safe for us to long the market or to short the market. So I think it will be short video by the way, but I think it will be still informative. So enjoy it. Don't forget to like it. Don't forget to subscribe to this channel and share it with your friends, because if your friends even don't know what is trading, just funny to watch it, right? So enjoy, guys. Alright guys, so we are on the euro-dollar chart, and I think you noticed that during the last 2 weeks pair started to fall, and during the last 2 weeks the pair lost 2% of its value. So truly some shift in the sentiment is here and something happens, right? So our first task is to get why this bearish movement started from that point. Why for the market participants this structure right here is important, and why from here they started to sell, why they stopped buying in the strong bullish movement and they started to sell. So what we do first, and I think it is just very important thing for you to learn, we should start with the analysis of the impulses. Well, we should execute the price action analysis. And here, what do I mean by that? We just open the 3-day chart to analyze the past historical perspective, yes? So what do we do? Here, for example, our very close recent structure high, yes, so it is the structure high of 2018, and I think it is very important resistance, yes. So pay attention to the price action. From that structure the market started to fall, and once it reached that level right here, the lower low, the pair has retraced. It retraced and it set the lower high right here. Then from that point the bearish rally started again, and we see the bearish continuation, and right here the pair formed new lower low, lower close. Then from here it recovered, and from that point this lower high right here, and from that point new bearish rally started, new bearish impulse started, yes, and here is our new lower low. Then once again bullish reaction, and the market forms new lower high right here, yes, then new bearish movement, lower low right here, right, and then a very funny thing, so the pair broke the level of the last low high, and here we had just significant crazy bullish movement, yes, and it stopped right here, and from here it dropped once again, yes, and here pair forms new lower low, lower close, and then pair started to consolidate, and here it started to coil. Yes, we had some price fluctuations right here, yes, and then bullish impulse that stopped based on here, yeah, based on the point where 2 weeks ago this bearish rally started. So what do we do with that? How the hell it can help us to get why the pair started the bearish rally from here? And it is just very simple, guys. So what you do, you just draw the horizontal line based on the area from where the bearish movement started, and you look left. You look left at structure, and what do you see? You see that it was just the key level, yes. From that level in the past, very strong bearish impulse started, and moreover, even here you see the market reacted on that level, so it is definitely a key level. It proved its significance by this bearish rally. In the past, from that level this crazy bearish movement started, and You know, this time it looks like for the market participants, this level is important again. And by the way, you can see that just analyzing the candlesticks, once this key level was reached, you know, the market forms this doji plus rejection candle, this nice candle. After this sequence of the strong bullish candles, it truly just telling you that yes, something is important in the structure. Yeah, and now pair started to go down. Yes, the strong bearish movement started. So now we got the answer. Yes, we now got that. Yes, for the market participants, this structure is important and it's truly the key level. So our next task is to get where the market is going. Yes, where sellers most likely will stop selling and buyers will start buying for some pullback. So now let's see once again the details. Alright, so how do we get where the market is going right now? Where is the closest support? And here helps the recent structure, just the recent structure. And you can see from March, we had enough movement to get where is the closest support. And here you can see I really like this level right here. Why do I like this level right here? Because just in March, the strong bearish reaction from that level started and this crazy bullish movement stopped just perfectly on that level. It is the recent structure. You know, the recent structure is more significant than the past structure. And in my view, this is definitely the first goal for sellers, yes. And moreover, remember guys that we treat the structure not like the just one strict level. We treat it as the zone, yes, and here this narrow zone is the first goal for sellers. But you know, as you can see, occasionally the market easily just breaks the key levels, so we need to be prepared for the bearish breakout and bearish continuation. So we should know where is our next structural support. And you know what is funny is that we should also do not neglect the trend lines that the market followed. And you can see over here, if we just draw the trend line based on this lower highs, we can easily draw the falling trend line. Yeah, and why this trend line is important? Because it has already proved its significance by 4 touches. 4 strong bearish movements started from that trend line. So we assume that in future, when the market will reach that, it will be the very strong support, yes. And here you can see, because this falling trend line, it's not horizontal. Yeah, it's not horizontal, and time horizon is very important. So we don't know how much time the market needs to reach this trend line. So we will adjust our support, yes, and once it reaches that, we don't know when it reaches, but you know, because it's falling, this support is always adjustable. Yeah, so just it is the next goal, you know, the second goal for sellers, and we should definitely pay attention to that. And also, let's just briefly find where is our third structural support, yes, just in case if we see even continuation to the lower levels. And here once again, just the recent structure, and I think you notice how nice this structure right here, this horizontal structure right here. So why not in future? If just recently so many times the market has respected that level, why not in future it can respect this level again? So we have identified 3 structural support levels, 3 closest supports where sellers can aim at, yes, and we identified our resistance from where the short rally started. So now let me explain to you how do we apply these levels next week. Alright guys, so how we're gonna apply our key levels that we identified based on the trading next week, you know. And as you can see right now, sellers are quite close to our first resistance. So how do we apply these key levels? And here goes, by the way, the main mistake of newbie traders. Once they identify the key level, they think that with the 100% chance the market should just reverse from the key level, and they just blindly buy the key level and expect a strong reaction from that. Like if next week the market reaches that level, they just buy it and they just wait for the huge profits. But you know, things are not so simple, and quite often the market just breaks key levels one after another. So we definitely are looking for this something else. So your task next week is to place alerts to each level. Yes, you just set the alerts. Yes, like here we place on that key level. We place the alert. And once the market reaches the level, what we are looking for? We are looking for a reaction. We are looking for the reaction of the market on that level on the lower time frame. So next week, once the market reaches our first structure, yes, our first structure support that we identified, on the 4-hour, on the 1-hour chart, we will be looking for some reversal formation based on that level. The double top, double bottom, wedge pattern, triangle, something that signifies the reverse of the market, something that signifies that sellers are exhausted and pullback is coming. So look for the clues. You are looking for the clues. You're looking for the confirmation that sellers are willing to stop selling, yes, and only then we buy, only when we see the confirmation. And if the market just breaks, you know, and you don't see the confirmation, what you do, you just avoid losses. You just avoid losses, and you're looking for the next structure. And once again, you place the alert on the next structure based on the trend line that we identified. You place the alert again. Your alert is placed, and once the market reaches that, you once again notified, and once again you check the reaction. You check the reaction on the lower time frame. You once again look for the reversal pattern. And if sellers are willing to stop, then you buy, and you aim where? To the support that is now broken, and that turn to resistance. This will be your first goal, you know. So remember, each time when the market breaks the structure, it's support turns to resistance, and resistance turns to support. So don't forget about that. And you know, reaction is what is important. Only checking the reaction, you can beat the market. But if you just trade each key level, bro, I think you're gonna suck anyway. So just learn to check the reaction. And you know, just recently I recorded a very nice video how to avoid losses, and I will attach it somewhere here so you can see how do we check the reaction. Yeah, so quite interesting, I think. And you see, we identify the key levels. We didn't discuss the exact trading plans. We just identified the key levels, and we will trade only from the key levels. Right now the market trading between the key levels, and for us it is very, very risky to be in the market, to trade the market. We wait for the key level, and once the market is there, reaction is what you're looking for. Alright guys, so this is basically how it goes, and I hope that it was quite insightful for you. And I truly believe that the structure analysis is just the foundation of technical analysis, and no matter what strategy you trade, if you don't know how to correctly identify the key levels, you will most likely fail. So learn the concepts that I gave you, learn and try to apply them, and I think it will help you, and it will dramatically improve your trading. And if you want to see more examples of structure analysis, if you want to learn more how to identify key levels, join my educational group, and I have really a lot of content on structure there. And also don't forget to like this video, don't forget to subscribe to this channel, and if you have some topics to propose for the next market preview, feel free to do that in the comment section. If you have some questions also, I reply to all your questions, so just feel free to leave them in the comment section. So good weekend guys, enjoy your weekend, relax, and I will see you next week, and good luck guys.